Good afternoon and welcome to your weekly FX options report. Today is Wednesday, July 14th, 2010. The broader U.S. stock averages are trading in positive territory, paring back from earlier weakness and also extending gains for the sixth straight session in a row. Earnings season is officially underway and the latest earnings reports out from Alcoa as well as Intel have been boosting overall investor sentiment. In midweek trade, U.S. economic data releases came in mixed. Retail sales for the month of June fell for the second straight month in a row, down by 0.5%, following the revised April reading of 1.1%. And excluding autos, retail sales declined by 0.1%. At the same time, business inventories rose just 0.1% in the month of May from the gain of 0.4% seen in the prior month. And U.S. import prices declined by 1.3% in June, dropping the most since January of 2009 due to the decline in cost of business equipment, consumer goods, as well as oil. Now, compared to a year ago, import prices climbed by 4.5%. And in terms of overseas fundamentals, the IMF cut the 2011 Euro region growth forecast. For 2010, the IMF expects to see growth of 1%. While for the upcoming year of 2011, they expect to see a growth of 1.3% in the region. Now, shifting our focus on over to the spot FX market, the US dollar is trading lower against the majors of the euro, pound, and the Japanese yen. The UK pound hit 2-month highs against the US currency, and this does come following better than expected data out from the UK. First and foremost, the labor market continued to improve with UK claimant count unemployment down by 20,800. Meanwhile, the May trend earnings slowed to 2.7% year over year. At the same time, the BOE's sentence continued to support the view that the central bank should begin raising rates. Now, one way to trade your views on US dollar strength or weakness is to take a look at ISE's FX options. One advantage is that they are US dollar denominated. For more information, you can go to www.fxoptions.com. In our next segment, which is our daily trend report for the major ICE FX option pairs, let's start out by looking at the AUX, that is the US dollar against the Aussie. Now, for that pair, it is under pressure. The RSI is mixed with a bearish bias, and the preference of trading central analysts for the AUX is short positions below the pivot of 120, with targets standing at 111.20 and 106.75 in extension. Looking at the BPX, which is the US dollar against the British pound, that pair is also under pressure. Now, the pair is challenging its bullish channel lower boundary, and the preference of trading central analysts is short positions below 68, with targets standing at 64.50 and 63 in extension. For the CDD, which is the U.S. currency against the Canadian dollar, that pair is also under pressure. Now, it has struck against its resistance, and the preference of trading central analysts is short positions below 106.50, with targets at 101.40 and 99.50 in extension. Moving on to the EUI, which is the US dollar against the euro, a rebound is expected. Now, that pair is pulling back on its new support ahead of a rebound, and the preference of trading central analysts is long positions above 78, with targets standing at 80.70 and 82.30 in extension. For the SFC, with the US dollar against the Swiss franc, that pair is under pressure. Now, the RSI has broken below its rising trend line and is currently challenging its support. The preference of trading central analysts for the SFC is short positions below 109, with targets at 105 and 102 in extension. Last but not least, in this segment, let's take a look at the YUK, which is the US currency against the Japanese yen. Now, that pair is under pressure and is posting a rebound, but should strike against its resistance. The preference of trading central analysts for the YUK is short positions below 90, with targets at 86 and 83.55 in extension. Now, we will move on to our next segment, which is their weekly trend opinion. Now, taking a look at last week, the US dollar weakened against the other currencies, and because of this weak US dollar trend, trading central analysts had a trade alert on the PCO, which was reached with a 100% gain. Now, speaking of which, let's take a look at portfolio performance. Since its inception in August of 2007, it is up by 1,588.33%, and since the beginning of this year, since January 2010, their portfolio is up by 308.23%. We do have two trade alerts for you here. The first one being the puts on the CDD, and then the calls on the NDO. Now, regarding the puts on the CDD, the pair has struck against its resistance, and should face weakness as the RSI is badly directed. For our next trade alert, which is the calls on the NDO, Trading Central analysts are looking at this because the pair is on the upside and is currently challenging its bearish flag upper boundary. Also, a further up move is likely as the RSI is well directed. Now looking ahead to next week, Trading Central analysts will be looking at the following ICFX option pairs, including the SFC, the SKA, and the YUK. Now they will be looking at the SFC because it does remain under pressure and is currently challenging its support. The SKA is currently badly directed and is approaching its next support at 73. Last but not least, for the YUK, the outlook is not as clear, but it is posting a rebound on its support. At the same time, it is below its new resistance at 90. And that does wrap it up for a weekly FX options report. Make sure to tune in next Wednesday for your latest in FX options news. Thanks for watching and have a great day.